Hey everyone, and welcome to This Explainer. Today, we're diving into a fascinating concept that totally challenges a massive myth in the trading world. So many people out there believe that true trading success comes from discovering some top secret indicator, a hidden AI signal, or like the perfect foolproof strategy. But it turns out, true success actually comes from a fundamental shift in exactly how you operate. Let's break down why the greatest traders don't think like speculators, but rather they operate like CEOs.
The core theme here is pretty clear. The market doesn't pay gamblers. It rewards disciplined business owners. I want you to imagine, just for a second, opening a brand new restaurant. But instead of having a solid business plan, you decide to change the entire menu every single day based on your mood. You never count your daily expenses, and you literally just sit by the front door hoping customers magically appear. That restaurant wouldn't survive a month. Yet, crazy enough, this is exactly how thousands of amateur traders approach the financial markets every single day. They're hoping and guessing rather than planning and executing.
So here is the agenda for today's corporate briefing. We are going to build a structured business model step by step. First, we'll cover the mindset shift. Second, inventory and risk. Third, standard operating procedures. And finally, review and continuous improvement.
All right, let's get into part one, the mindset shift. So there's this stark contrast between two very different archetypes. On one side, we have trader A, the gambler. They wake up and ask, will this trade make me money right now? They're always chasing breakouts, they get mad and double their position size after a loss, and they totally change their whole strategy every week the second things get tough. It's basically pure emotional chaos. But then on the other side, we have trader B, the business owner. They ask, does this trade actually follow my proven process? They risk a fixed amount, they wait incredibly patiently for their high-quality setups, and they journal every single trade. Looking at these two profiles, you've got to ask yourself a brutally honest question. If your trading account were a publicly traded company today, would you invest your hard-earned money in it?
To actually be the business owner, you have to understand this one concept. A trading edge is simply a proven process that acts like a biased coin. It basically ensures that over hundreds of executions, a positive expectancy produces favorable results, even though you have absolutely no idea what the very next trade is going to do. Think about a casino, right? The casino has no idea if the next person sitting at the blackjack table is going to win or lose that specific hand. They completely accept that individual hands are uncertain, but they don't sweat it at all. Why? Because they rely entirely on their statistical advantage over a massive sample size. They know for a fact that over 10,000 hands, their edge guarantees a profit. And that is exactly how professional traders operate.
Moving right along to Section 2, Inventory and Risk.
Okay, so here is a crucial reality check. Your trading account, it is not a scoreboard designed to validate your ego. It is literally the inventory that allows your business to function. Think about it. A retail store absolutely has to safeguard the products on its shelves. A manufacturing plant has to protect its raw materials. If they run out of inventory, they literally can't do business. As a trader, your capital is your raw material. Without capital, the business is bankrupt, and the doors are closed for good. Just like any traditional business, this framework emphasizes that protecting your capital has to be your absolute top priority.
And that means establishing mandatory business rules before the market even opens. A professional relies on incredibly strict capital allocation rules. They risk a fixed percentage per trade. They define a maximum daily loss limit, as well as a strict weekly drawdown limit. And most importantly, this is huge, they stop trading immediately when those limits are hit. Going back to our restaurant analogy, if the walk-in freezer suddenly breaks, a smart owner doesn't take the rest of their cash and blow it on luxury dining chairs just to feel better, right? They lock down spending, preserve their cash, and ensure the business actually survives the setback. In trading, survival always comes before growth. These rules prevent one bad, emotional afternoon from turning into a catastrophic, account-blowing month.
Just look at how these two archetypes view taking a loss. The gambler fights every single loss tooth and nail. They take it super personally, viewing it as a failure to accurately predict the market. But the business owner, they just record the loss on their ledger and move on. They view it as a totally unavoidable operating expense. Look, every traditional business on earth budgets for expenses, rent, electricity, payroll, because they know those costs are strictly necessary to access future revenue. A losing trade is literally just the rent you pay for doing business in the market.
That brings us to Section 3, Standard Operating Procedures. You know how professionals in high-stakes environments, like airline pilots and surgeons, rely heavily on checklists? They do it because they know that consistency beats confidence every single time. Great traders establish concrete steps to prevent decision fatigue. A structured daily morning routine looks exactly like this. Step 1. Review higher time frame trends so you actually know the big picture. Step 2. Check economic news. You definitely don't want to be caught blindly in a massive volatility spike. Step 3. Build a targeted watch list. Step 4. Identify your key price levels. And Step 5. Define exactly what an acceptable setup looks like for that specific day.
Then, right before you actually click that buy or sell button, you need a pre-flight trade verification checklist. You have to ask yourself, does this setup actually match my plan, or am I literally just bored? Is the position size mathematically correct? Is the risk within my daily limits? Is the potential reward even worth taking this risk? Verifying this checklist before you enter a trade completely automates your decision-making. And here's the secret. The more decisions you automate through rules, the more precious mental energy you preserve for managing the trade once you're actually in it.
Finally, let's hit Section 4, Review and Continuous Improvement.
This whole framework treats the end of the month exactly like a corporate board meeting. Because look, you can't improve what you don't measure. You need to look at your P&L and your drawdown to assess your overall financial health and the real risk you took to get there. You analyze your win rate and expectancy to measure if your trading edge is actually working. You review setup quality and mistakes to identify where operational errors occurred, like did you actually follow your strategy? And tracking your best time of day is such a brilliant way to optimize your schedule. I mean, maybe you make all your profit in the first 2 hours of the morning and give it all back in the afternoon. You'd never know unless you tracked it. Measure first, improve second.
Oh, and we definitely can't forget the reality of overhead. Trading has tangible operating costs. You've got brokerage fees, charting platforms, premium data feeds, computer hardware, your high-speed internet bill, education, and of course taxes. Professionals budget for these just like a brick-and-mortar store budgets for utilities. Keep organized records, treat the capital seriously, and definitely consult a tax professional. It is absolutely crucial not to let hidden fees slowly bleed your business dry.
So, the crucial point for long-term survival here is adopting a Kaizen mindset. Kaizen is basically the philosophy of continuous, incremental improvement. Don't try to become a perfect trader overnight. It's literally impossible. Instead, just aim to improve a little bit every single week. Through rigorous journaling and backtesting, try to eliminate just one recurring operational mistake every month. It's wild how fast those tiny 1% gains compound over time into massive performance improvements.
Fast forward 1 year later, look at our two archetypes now. Trader A, the gambler, well, they have some fun memories of a few massive, exciting trades, but they are ultimately stuck in a cycle of emotional exhaustion and likely sitting at a net loss. But Trader B, the business owner, they've built a highly scalable, repeatable process. They've completely separated themselves from the noise of the crowd. The ultimate difference in their results over that year wasn't natural talent, it wasn't a higher IQ, and it certainly wasn't a magic indicator. The real difference was professional management.
The bottom line is that the market unequivocally rewards preparation over prediction. You have to start thinking like the CEO of your own trading firm. Protect your capital, execute your edge without hesitation, measure your results coldly, and improve continuously. So I want to leave you with a provocative question to spark some action today. Taking a hard look at your own trading right now, what is the very first business habit you are going to adopt? Let us know down in the comments and go start building your trading business today.